All righty, Doctor from North America. Good morning, good afternoon, good evening. We see a little strength on the stock market side, and today they're going to lower interest rates. And obviously, you can see yesterday we looked at it early in the morning, and we were down at the lows there. By the end of the day, they were anticipating, oh my goodness, they're going to lower interest rates tomorrow. Hooray! And so, what did the market do? It bounced up a little bit, but what is it doing today now? Going minus again. It's down at a closing low of like the last, was that about 3 weeks, something like that, since November 22nd. Hasn't closed that low since, I guess, right around in here, November 21st, in that area. And as we talked about before, we start off today, due to the fact that this is what governs the currency pairs. So you're seeing here, interest rates are going up as the Federal Reserve is going to lower interest rates today. I could say that again, but it just, people go, what? What does he say? So the Federal Reserve, the U.S. Central Bank, is cutting interest rates, but the market is raising interest rates at the same time? Yep, that's exactly it. Talk about confusion. People want to give Mr. Powell some type of credit, like, oh, he's a smart man, he's maneuvering well, It's like, no, he's not smart. He doesn't understand inflation as much as he thinks he does. He's allowed inflation to explode. Then he is now trying to explode inflation again. And you don't know if it's because of he wants to sabotage Mr. Trump, which he won't. He's not smart enough to sabotage Mr. Trump. He's only smart enough to irritate us. That's all it is, really. And the market is telling him, you don't know what you're doing, and basically go away. What he really should do is he should resign and let Mr. Trump put somebody in that actually is competent. And we'll see how that's what there was conversation about a shadow. Was it like like how in England they have, you have a couple different parties, in the parliament, and when one is controlling the parliament, like the way Labor is right now, there is a shadow government that's meeting with them every so often and discussing policies just so that they have a heads up where they're going and maybe they can get support from them. In other words, work in unison. And so there's talk about having a shadow Federal Reserve, because right now the Federal Reserve that we have makes close to no sense. What they're doing, when they're doing it, how they're doing it. They're allowing things to explode for no other reason than the fact that they're John Maynard Keynes' socialist economics, and it doesn't work. If it did work, Europe would be telling us what to do. China would be roaring along, and the most powerful nation in the world would be the Soviet Union. So time, shows us. Time shows us exactly what's going on, just by the movement of time itself. In other words, you look back, like there's this one fellow. I'm going to deviate a little bit here. There's this one fellow on Fox Business. His name is Neil Cavuto, and he does a commercial about his TV show on at noon in the United States, from noon to 1. Thank goodness, he used to be 3 hours long. He's just too irritating. And he says, his commercial says, I seem to have a good track record, so I've been right more than wrong. And it is so false. He's one of the worst shows on Fox Business. Fox Business is separate from Fox News. Fox, they're both Murdoch on some level, but Fox News now is owned by Walt Disney Company, ABC News in the United States. So it's been that way since 2018. Whereas Fox Business is just Murdoch, and it's more efficient. And so they pushed everybody over from one to the other, and it's way more efficient. It makes money, whereas CNBC or Bloomberg or probably Yahoo Finance. I don't know. I would assume it makes money on some level, just because it's a search engine, But they really don't make any money. The other news agencies like ABC doesn't make, the news network doesn't make money, and none of them do. But anyway, Neil Cavuto gets on there and he has a commercial and he says, I have a pretty good track record. I'm thinking to myself, you don't have a good track record at all. I've seen you for 30, 40 years on TV, and your track record is horrible. So that's the First Amendment in America. Allows anybody to say anything they want. People think just because you can say it, it's truth, and it's not. So you look here, and here we are. I said that yesterday. I say it a lot of times here. Why doesn't these other financial channels emphasize the fact that interest rates are being lowered by the Federal Reserve, the official rate, and at the same time the market is yawning and walking away from it and doing the opposite? And I heard someone this morning say that too. They on Fox Business, they said, well, yeah, they're lowering them today, but they've been the market's been raising them for the last 2.5 weeks. And it's like, here it is, back on the peak on the 6th of December. And here we are, what is that? We're at the 18th. So it's 12 days ago. That was the peak of lower interest rates. And now they're driving it slowly down to here. Because remember, we're looking at the price of the bond, not the interest rate itself. So it works in reverse. So in other words, when the price of the bond rises, interest rates are going down. And then when the bond price is going down, interest rates are rising. So, it's I repeat this a lot around here, and today I started off because I want to see where the interest rates are, and you can see that little hiccup right there. This is the 10-year bond. Yesterday we went on a tear on this because I went in and showed you all the bonds around the world. But let's just go back over to the dollar index because we're more of a currency thing than we are anything else. We talk currencies, but we talk it all: stocks, bonds, currencies. We look at all of it. We're not just looking at a few things here. I mean, we look at international indices around the world, the whole bit. We're looking at it all. We're a cyber trading pit, basically, of ideas. That's what it comes down to. And when you stand in a trading pit all day long, 6 hours, you don't know what is going to come out of people's mouths. There's some thinkers, there's some fools, there's everything. It's a trading pit, and that's what we are. We're like a cyber trading pit, and that's what you hear coming out of my mouth. Is that it's like just when you say something, someone's ready to challenge it in the trading pit. Not counting the fact that you're trading live and trying to make money at the same time. So. Let's go. Let's take a look at the dollar index and see where they're at this morning. DXY. Where are you, DXY? There it is right there. And there is the dollar index, the 6 pairs trades. And you can see as interest rates rise, it pushes the dollar up, not down. See, basically there's the 6th. It bottomed on the 6th. When you look at the bond, it topped in price. And here it bottoms in price for the stock index, or the stock index itself. I'm sorry, currency index itself. The currency index has the 6 currencies in it. We have the euro, the most liquid, second most liquid currency in the world, the euro. The third, that's the second most liquid currency in the world. The third most liquid currency in the world is the Japanese yen. It's all done by volume and liquidity. And the next one, I guess you would say it's the fourth, is the British pound, because it's the American dollar, the most liquid currency in the world. The the euro, the Japanese yen against the dollar, the British pound against the dollar, the Canadian dollar against the dollar, the Swiss saltine, if they still call it the saltine anymore, but the Swiss currency, Swiss franc. And then, who's the last one? The last one is the kroner. That's what it is. And so there's your 6 currencies that make the index. That's all there is 6. And obviously, if one of them, actually right now, the kroner and the Chinese yuan converter is about tied when it comes to volume now. So, China and I guess, I guess it's the Norwegian kroner, or it's the I'm always a little confused about that whole thing there to begin with the Swedish kroner, but it's a kroner. I know that much. It's the kroner. I think it's the Swedish kroner. And so China, I had somebody try to tell me that China is the second most powerful economy in the world. It's like, no, the European Union is. And they were like, oh, no, you're all wrong. It's like, no, you're all wrong. So that's the dollar index. And, a lot of times we look at these things and we really don't know what we're looking at, We kind of forget what we're actually looking at. We get lost in the noise, I guess you could say. All right, so there it is. There's the dollar index, and it's trying to rise. It hasn't taken out this high right here yet, that 108.07. Where are we at today? We are at 107.03, basically. So we still, they're not really sure what to do with this whole currency thing at the moment. It's going in a lot of different directions. It's not like they're exploding and, it's like, in other words, running mad and wild. You're not talking about like Turkish lira volatility. You're talking about very quiet volatility. You're looking at 1.08. Is that right? Let's take a look at that again. Yeah, you're looking at 107, 106, 105. Look at that. That's 105. All the way down to here. Can you imagine? When you go back to September 30th, you're talking about 100. You're talking about 7 ticks, or, I guess you're saying 7. I guess you could say is that 7%? I guess it is in some way, But it bounces between those. It doesn't, it's bouncing around in that area, nothing major. Maybe you get a 15 or 20% move over a year, maybe less, 7% over a 6-month period. You can say basically right here, back in is that July? Yeah. So there's July trading at 100.22. And you could say that over the last, 5 months, the product is going up about 6%, and it can go down 5 or 6%. And, we can go over to the currencies now and take a peek at those. But, compared to some of the more volatile things in the world. I mean, when we look at like the zloty, the Polish zloty against the euro, or you think it's a euro zloty pairs trade. That thing's been locked between 4 point something and 4 point something for a long while. You get your 6 or 7% move. It's not as vicious or volatile as some of the other products, but it's interesting still. All right, so let's take a look at the euro and see what the euro is up to this morning. And there we go. We're going to put it up on that screen right there. There it is. There's the euro. The euro has come down from 1.12 down to 1.05. It's actually 0.49 1.29. So basically you're looking at rounding it out 1.05 from 1.12. Not the worst things in the world. Obviously the dollar has been strong. It's the opposite. The euro looks like the opposite chart of the dollar index all the time. Since I think the euro is something like 52% of the index too. It's that big an influence. And you can see here we topped out way back there. What is that? That is late September. Went into a weekly sell in late September, the last week and a half, something like that. Fell from the 111 and change, 112 area, down to what's it? Right there, 103.33, and seems to have bottomed in here. It's trying to build a base. I guess you can only lower interest rates so far. Thank goodness we're moving away from the insanity of minus interest rates. That is too weird. It's so wrong to be minus interest rates. It almost, it just shows abuse by the governments, by the central banks, when they won't even pay interest on the money they borrow. They charge you. That'd be one thing if they didn't pay any interest, but they didn't ask you for interest. But it's been a very strange world we're in with the quantitative easing, where European banks and some banks in the world countries were able to charge. They were so scared, they were so concerned that that there was no safe haven, that professional money managers were willing to put money into the government bonds and at the same time pay the government interest. So they bought the bonds from the government with money, and then they paid interest to the government to be invested in their bonds. Just like, whoa, talk about bad. Talk about confusion, not understanding markets. The money managers and the government. Think about it. I sit here and talk about binaries, options. There was no need for that. They could have easily bought product and created synthetic bonds. And they could have sold calls and bought puts. And they could have made, interest on their money. That's what people do. They give funds, money management companies, money to manage so it makes money, not loses money. It was, for years, they were losing money on bond trades. The most safest trade in the world was losing money. Not because of interest rate changes. It's because they were actually charging people to be invested in their bonds. That's the weirdest thing. So, that's why Doc mentions this stuff, because no one can get on this. No one can get on the chat line and challenge that and say, Doc, you're out of your mind. That never happened. It's like, no, we have, years of history of prices showing you that they were doing it. Remember the time that I guess it was back in 2000. I guess it was the first 5 or 6 years of quantitative easing under Mr. Obama. So now that meant the globe was tangled in his psychosis. And there was money down in Cyprus. Remember the banks in Cyprus were like, kind of like outlaw banks in a sense. They allowed people to invest in their banks and put money there, but they weren't, I don't think they were charging interest or something like that interest, taxes. So one day things were so bad in the global marketplace, they took people's money that were in banks like savings accounts and checking accounts, and they handed them stock in the bank because they were so desperate. And so, and everybody in Europe, I remember, what was the head of the European finance, Draghi, the Italian finance minister or prime minister that became head of the European Union's financial arm. He said, this is genius. This is genius. So you put your money in a savings account, and then you wake up one morning and now you have stock. And you go, well, I want to sell the stock. I want my money back. And they go, oh, no, you can't have that. We'll let you sell like 5% of the stock once a month. Yeah, and the media in Europe thought that was genius, robbing people from their money and handing them stock and telling them they can't sell it. They thought that was genius. You can't make this stuff up. That's the amazing part. I can tell you the stories, the reality, but you can't even make this stuff up because it's so stupid and it's so ridiculous. And they did it. And the national media in Europe thought it was brilliant. It was genius. Amazing, isn't it? Isn't it amazing? I love it that I can sit here and talk about this stuff. And it sounds as insane as anybody would think. And I remember one time I was at a swim meet. And interest rates were low. It was like 2014, maybe 2000. It was right around then too, right before Cyprus had done that. And it was like I was saying that they're charging, and people in the swim stands here in the United States were talking about finance or something. And one of the history teachers had a son swimming in competition, and we're all sitting there. He said, have you ever heard about minus interest rates? I said, yeah. He says, who does that? I said, most of the world. He said, no, I don't believe that. I said, yeah, they do. He's like, seriously? I said, yeah. I said, the United States is one of the only countries that are paying no interest. We're at zero at the moment. But our 30-day bonds, our 30-day bills here in the States for a while back then would trade in the minus. They would actually trade in the minus. I said, yeah, our T-bills are trading minus right now. So if you buy a government T-bill, you also have to pay the government interest. And he says, that's impossible. I said, no, it's not impossible. It's going on right now live. And across the world, I said, like Germany, they're charging like 3/8. So not only do you buy a German bond, but you have to pay the Central Bank of Germany 3/8 in interest at the same time. Oh, that's ridiculous. That's not happening. So it came in the next day and it was like, I can't believe it. It's actually happening. I said, yeah, it's really happening. So anyway, here we are. We fast forward. We're looking at the bond market. We're looking at the currencies, and we see that what we see is that the bonds are going in the opposite direction of the official interest rate of the central bank, and that's the crazy that we live with every day. I love it. It's real fun. All right, let's go to the British pound. They're showing some strength. You can see today the euro is trying to break down here. You see that right there on the daily algorithm. It's still just plus by 0.00012. You can see we got a red dot going on here. We're having some problems, and we're still in that long weekly sell. The fast did get into the buy last week, but it's not what we wait for. We wait for both of them to be in the buy. The slow, the green line, and the blue line there. And the histogram is just a reminder. It's just a single standard deviation versus the standard deviation of the green line. Using the manifold right here as like oversold. So as it stays underneath, it's oversold until it comes to this point here and starts to get bought. And then we know that it's starting to climb. And then we go over to the British pound. There's the British pound. And the British pound, doing that same thing. We closed in a daily buy there yesterday. Let's get that line in there. Matter of fact, where did the red line go? Let's put that in there. We'll do this. Go like that. And there's the sell there. Just to remind you. I mean, we just stick it in there so that you can see it, so you get it. Oh, yeah, look at that. It's in a buy. Okay, yeah. And you can see the weekly is piercing, whereas on the euro, the dollar-euro pairs trade right there, it's still underneath, still not able to get lifted up. So it's still feeling that pain. Whereas cable, and I did look up, I remember yesterday talking about that, I did look up, I'm trying to see if they've actually, they're negotiating or debating or they're doing something. They're trying to figure out what they're going to do with, the Parliament. I mean, there's no reason for the Labour Party to give up its power The first elections in England come in May for local elections, and there might be a couple of parliamentary seats. And I guess it's better to hold on to the power until you're kicked out of government, which is all the way up to 29. It will make some sense sooner or later, but Nigel Farage, who knows? Nigel might pick up enough people over the next year or so, from Labour and the Tories to become Prime Minister himself. Boy, wouldn't that be something? So that's where the betting is in England. They think that Nigel's got the best chance of being the next Prime Minister. All right, just shows you the rebellion going on around the planet. Also, I think the German government fell again a couple days ago. Oh, I saw a really wild headline. I'll have to put it up on the screen here for you about Germany. Let's see. Let me put it up there now. And then, there we go. And let me just put it up there, and then I don't have to think about it too hard. There it is right there. All right. So now when we jump back over to the beta, you'll see it at the same time. That's what it comes down to. All right. From there, we'll go take a look at the Swiss. The Swiss surprised me. They put in some more push into it last night. They did close lower, though. See that there? Just a little bit lower. But, boy, they started going onto the top part of the channel here that we believe exists. Part of our imagination, You can see here at the same time, today it's a little bit higher than yesterday. Nothing major. It's still in that buy now for a 7th day. And the weekly is, it's been, what's the spreadsheet say? Spreadsheet says, where is that at? Let's put it up or let's scroll down to it. There's the, I should move that around for when we do the different subjects. So there it is right there. 11 weeks in a sell for British pound, and now we're jumped above. Today's Wednesday, so that's cool. Euro, on the other hand, 12 weeks in a weekly sell and not trying to jump through yet. Now here you see the Swiss, 11 weeks also in a weekly buy. Remember, this is a dollar Swiss pairs trade, so when the Swiss is rising, it's losing money, and when it's dropping, it's gaining against the dollar. So, and there you can see it right there, and there it is right there, and you see where we went into it right there. There's the weekly signal right there. And it reiterates itself. In other words, it reconfirms every week. Then from there, let's march over to, let's see, where's it at? There it is right there. Let's check out the yen. That's why we follow these. We don't really, nobody really asks about looking at the Canadian anymore. But we used to, look at the Canadian a lot. We have it on the screen here. I saw something today, a headline, something about it. Well, maybe today we'll do the Canadian after we do before we do the South African rand. And so you can see here, the yen has been losing against the dollar. It's that interest rate. It looks just like the opposite of the 10-year bond. And that's why we started off showing you the bond. At the same time, you can see we've gone from weekly sell for 2 weeks, and then up in here we went into the weekly sell and it slid down, and now we're flirting with weekly buy right here. Last week it closed in a weekly buy and is climbing still, and we're at the highest point, and you can see it's dancing in between. It's starting this morning. It's playing with minus 0.04. It's just flirting with the weekly sell now as we speak. But the daily is just at 0.03. It's in the plus still, but it's got a red dot. And it's just bouncing back and forth. It's nothing major. And then from there, we go to, let's go to the Canadian. That's where we used to do. We used to do Canadian right afterwards, but it's been years since anybody cared about the Canadian here. And you can see here, Canadian, it is the dollar CAD pairs trade. And so here we are at, I think it's like a 10-year high or 20-year high, or I don't know, something like it. That's what I miss about J4X more than anything else, is being able to go back and look at some of the other currencies, and how far back it goes, and how they've been doing and all that. So we can do that off of Yahoo now. And let's see, was it USD CAD? Let's see, dash. Is it there? Yeah, dash CAD. Was it coin? No, I don't want a coin. I want the currency. USD. See what this does. There we go. Let's go to 6 months. Let's show you what we're looking at there. There's 6 months. You can see it's taking out that top with no problem. And remember, it's when it's going up, it's losing money because it's the dollar CAD. So then we go to 1 year. There's 1 year. It's definitely above there and there, that's for sure. And then we go to a 5 year, and that's what it must be. They're challenging a 5 year numbers. That's what they're doing right now. And then I guess we could go to an all time. We're looking at some high numbers there all time. That goes back to 2005, and we're playing. This thing's banging against the top end of the range. Right now, they say the Canadian government is just all over the place. It's kind of lost its direction altogether. So, all right, righty. That German story is right here. Since we're over here, how Germany destroyed its economy and how to fix it. They are. Maybe that's probably why the euro is much weaker than the British pound. I guess that's probably why I saved that story this morning. And it says here, Germany made its first big mistake in 2012. That's like 3.5 years after the beginning. That's the second term of Mr. Obama at that point. That was election year, when its leaders accepted the left-wing diagnosis of European debt crisis, which blamed all problems on existing austerity. Germany embraced inflation, and in 2014 agreed to the same monetary and interventionist policies that have always destroyed Europe. Oh wow, that's pretty harsh. German government and the Bundesbank reluctantly agreed to massive ECB, European Central Bank, monetary expansion and negative nominal rates. There we go, right there. I didn't even read the article. I just saw the headline. So there it is. And it's so soft and pretty and nice how they say that. Monetary expansion, but this part is really fun right here. And negative normal rates while allowing European normal, right there alone. Right there it says it. And that's in 2014. They were doing that in 2012. While allowing European Commission to abandon its oversight and excessive indebtedness and signing off to back-to-back stimulus packages like the Juncker Plan, Juncker Plan, or the Next Generation EU disaster. Next Generation EU disaster. What a horrible name that is. All which have left the euro area stagnation. Euro area stagnation with more debt and now inflation. Germans suffer a cumulative inflation of more than 20% in the last 5 years. Well, that's because of the Joe Biden, so that's okay. That makes sense. Politicians blame it on Ukraine and Putin, but we all know that that's ludicrous, since money supply growth and constant increases in government spending have obliterated the purchasing power of Europe Euro and fueled inflation. So there you go. That's why I started off today with the bonds, because it just seems so unfair to for the media, the financial media, to hide this stuff all day long. It'd be different if I was like, there used to be this one guy. He used to. I can't find his name. Back in the 70s and the 80s, 1970s and 1980s, he used to have a newsletter, and the newsletter was something about the New York specialist system. Back then they controlled like 78, 81% of the market. Now they control about 19% of the market. So, and the commercial would start off with him in a Rolls Royce driving, up his driveway. And if you followed his newsletter, you would be able to trade like the New York specialist. And he would complain about them all the time, and just rag on them and how criminal they were, and just all that stuff. And no doubt they controlled a lot of the market, but they weren't really criminal. They were just doing the way the system worked. That's all. And things changed. Now the New York Stock Exchange is owned by IC, International Commodities Exchange Corporation, ICE, and it's just a subsidiary, and it's just like a marketing tool, clearinghouse type thing. Nothing major anymore. Whereas the NASDAQ and individual brokerage houses now are much more dominant than the New York Stock Exchange. But that's irrelevant at this point. But it was always sounding conspiracy, the commercial. And and now here I get on here and talk about the actual facts, and it sounds like conspiracy also at the same time. You just got to say, wow, is that really true? Minus interest rates? Or in this case here, they just dropped all the rules of the ECB and just inflated. And now, over the last 5 years, it's been, inflation in the 20s. It's like, ouch, So you got to wonder how much influence, how much we talk about the great experiment, the Turkish lira. But, it's obviously worse than that. Not worse than that. I'm sorry. That's worse than, obviously the Turkish lira is even more exhausting, I guess you could say. It's going from 1 to 36. I mean, the euro is going from like 1.30 or 1.40 down to like, not 0.94. I mean, the Turkish population would kill for something like that. They would love that. I mean, their thing is going from 1.0 to 36.0. That's a beyond. It's, if you were comparing the two, one is like a small airplane in the sky compared to an F-35, that can go 3,000 or 4,000 miles an hour, and the small airplane can go like 275 or 300 miles per hour. It's like, the Turkish lira is the F-35 in speed and explosion, and inflation. But anyhow, there it is right there. That was the CAD showing you that it's having its issues. And then we go to right there. There is the Turkish lira in a buy for a fourth day. You can see the weekly is flirting. It's at zero at the moment. It's not minus anymore. We've seen 12 weeks. Is it 12 weeks now? Yeah, 12 weeks and a weekly sell for the first time in 5 years. When it used to trade at 8.0, it's pretty bad. We've seen that currency go through the moon during the inflation factor. It just showed I guess it's a combination of not being able to produce enough domestic goods. You have to buy foreign, and then you didn't have a strong currency. So, combination of those things and just enormous spending in the wrong directions really have hurt the currency itself to go from 1 to 36, not 1.1 to 1.36. That's a big difference. That's what I call hypersonic inflation. All right, and then from there we slide over to South Africa, and we'll start looking at the metals market. we're a little concerned to see this little bump. But the good thing is that the weekly signal is still playing underneath the zero line. So gold and silver should hold up a little bit better. I would think, I have not heard anybody talk about it yet, but the last couple days I've been thinking about it, and I don't think I've even said it out loud here, but a lot of the selling in metals and in stocks is probably tax selling. That's what the problem is with taxes. It forces you to sell things, so you can pay taxes. And so far, taxation hasn't really proven anything too efficient. No, it hasn't really shown us that it's the right way to go. It's all part of that John Maynard Keynes socialist stuff. It just isn't as profitable, say, as it should be. For the government, and a lot of wasted money, a lot of hope and dreams, but not necessarily success. So that's the magic we are looking at as we speak right now. So from there, where do we go from there? We shoot over to gold. Let's take a look at gold, and then we'll scroll up for the metals right there. And so there's gold this morning. It's 4 weeks in a sell, and it's 3 days in a sell. So let's see what gold looks like on the screen. There it is right there. There's gold. Down a little bit today. I guess, it's from that strength you see in the South African Rand right there. It's trying to pop up. It's pretty much unchanged, but it hasn't taken out yesterday's high, but it is doing that. Now, like I said, the good positive thing is that we're seeing it trying to get into the sell. If that goes into the sell, that should put some strength into the metals, but we're not really seeing that at the moment. Not yet. Soon, but not now. Let's see, where else do we go from there? Let's take a look at silver. Oh, also at the same time, look down below. You can see the weekly. You see that weekly right there? It's leaped up enormously. It's been 1, 2, 3, 4. It's actually 5 weeks in it. Gold that's 5 weeks. How's it 4 weeks? I guess that should be 1. Oh, I see. 1, 2, 3, 4. It's a 5th week in a sell. That's wrong. We'll have to fix that. I should open it up over here, because that's wrong. It's 5 weeks in a sell, not 4 weeks in a sell, going on a 6th week. That's what that is. Let me open that up and fix that too at the same time. And then over here we can see at the same time we have silver. And obviously gold is not staying in that sell. It's been in the weekly buy all week long. And it's been sideways all week long. These last 3 days it's been sideways to down. But it's been really battling it out. And that's where it is right. Oh, that's silver. Let's just do the gold again real quick on the short term. Yeah, it looks the same way. Same game. And then obviously there's the silver doing the same thing. And you're looking at 4, 5, 6 weeks in a sell, and it's trying to climb into the buy. Not as aggressive as gold is. Gold has leaped right up, and it's the February contract, and we're in December, so that is definitely the front month, and it's the number one contract to follow at the moment. Let's see. Let me open this up and fix that too at the same time. Surprised at how that got away with me. How about that? I put them in manually. This is just a track record of what we do. So sometimes I miss something, or something is saved wrong, or something like that. And then from there we'll go over to copper. And there's copper. Copper is drifting way more the last 3 days down. And you can see the weekly was higher. It's still in there though. It's above the zero line. But it's definitely going to turn into a horse race. It definitely will. So yeah, let's put that as 5 right there. And we'll save that too, like that. Oh, how about that? Okay. There we go. We're just loading it in there. So we got silver basically acting Same way as gold, and copper even showing more of an extreme. When we look at copper, we always think of China anyway, so it's just kind of like, just means that they have less disposable income or something of that nature. I saw there was a headline yesterday, or was it today, that said that, I think it was the today, where China says they bought 10 times more gold this year than they did last year or something like that. That's a big number, 10 times. Let's see if we can find that. That was a pretty wild story. So let's put that like that. Yeah, it was something like that. Final countdown. I wish I had saved it. And then anti-woke. China secretly. That's it. There it is, right there. Next time we go over to the beta, we'll show it to. Oh, it's a. I see. I didn't put it up there for that reason. It's one of those where it's a pay one. So it says, you have to belong to Zero Hedge. It says in October, China bought 55 tons of London over-the-counter market, which is striking since the official number reported by the People's Bank of China was 1/10 that of just 5 tons. So, they're really reaching for the metal. I guess, this way they don't have to hold the dollars. Just hold gold. I mean, it seems smart. So, all right. There's platinum. Platinum is trying to lift up, and it's down at the same time today. It's down like, I don't know, what's that? It settled yesterday at 43 and a half to be exact. It's trading at 32 and a half right now. So it's down, like $9. And is gold down $9? Let's see what gold is doing. Gold is unchanged, basically. It closed yesterday at 2,662, and today it's trading at 2,660, basically 61. So it's barely, it's down $1 compared to platinum being down as much. But then that's what's amazing is that by the end of the day, it seems to adjust itself. It's not the enormously liquid or enormously. It seems to tell us the truth. I think it does, at least. So, but we'll have that article on the screen for you, and that'll be cool. So, from there, we jump over to the energy sector. Let's take a look at Brent, which means we'll run over to the platform. Let's do the Brent. It's like a dance. Let's do the Brent. Right there. And there is Brent. You see, it's lifting up a little bit today. They knocked it down at the end of the day yesterday. It's in a weekly buy for 3 weeks here, so you can see the algorithm itself. Let's see, make it bigger like that. There's the algorithm. It's the second day in a sell, but it is up in price. And since you're in a weekly buy, you're no way in the world are you shorting it. The only thing you're doing is taking profits from the moves like from here. So, because it may just keep on rolling. I mean, look at it. It's above the zero line for a third week. And I think crude oil right there is a second week on the... well, here, let's take a look at West Texas on here. Here's West Texas right there, which will expire basically at the end of this week, going into Monday of next week. And you can see here, same, they all always look the same. And you can see here, same thing. Was that a plus? Let's make the weekly larger. No, it was a minus. So it was in a minus. It went into a sell last week. It was a weekly. It goes like this. It was weekly buy, weekly sell, weekly buy, weekly sell, weekly buy, and they're getting bigger too. Maybe some volatility is going to kick in. I don't know. It looks like it's trying to do something like that, or it's overbought at this point, and now we just need for it to turn, and then it'll start to go down. So it's showing us this overbought situation. You can't sell it until it goes into a sell. So there's that, and then you can see the daily chart right there. Now they slammed it yesterday. They bring it back to there, and then now it's back up to where it was on Monday. From there, there's the two raw products, I guess you could say, crude oil itself and Brent C crude oil. This is U.S. crude and then Brent C oil. So now we see what they make out of it, and we go over to the is that right there? Yeah, heating oil, January heating oil, which will expire going into next week. So you see here, they slammed it yesterday, same thing, and pushed it into a sell, and we're in a sell today, but it's up. At the same time, we have climbed up into the buy. So you don't want to short it at this point here. You're standing to decide. Remember, there's always three positions, traders. There's, you're long, you're short, or you are neutral. Yeah. Or, no position at all. So, all right, and then from there, we go over to natural gas. They put some charge into that last night, I noticed, right towards the end of the day. And there's natural gas. And you can see that right there. They knocked it down, but it did not survive that. It climbed up very aggressively by the end of the day. And now it's pushing into the buy, whereas for the last 2 weeks, somewhere's back in here. This is the third week now. So that was the close of, what was that? That's the close up. Let's just give it a refresh. We'll be able to see the week of when it went into the sell itself. The 6th. So the close of the 6th. So somewhere's in that week of the 6th of December. Somewhere's up in here. There's the 6th right there. So somewhere's in here it went into the weekly sell. And let's see, where's that? What is that? Where's the 6th here? There's the 6th. It was in a sell for a bunch of days there. And it didn't try to push you into a buy, daily buy, really, until there. And but we were in a weekly sell, so you were neutral again. You're kind of neutral for this, unless you're a producer. Then we can tell you how to utilize this math a different way. But if you're just out there getting long when it says get long, or get short when it says to get short, in this case here, it's been in a neutral situation, where it's in climbing into the weekly buy, but at the same time, it was in a daily sell here for the last 3 days. So it's kind of like you're trapped into a neutral. Now we're through the buy, and yesterday it started to push. But let's take a look at this. The algorithm. So that's the 12th. It's last week. It's just 2 days. Where's the Monday? They're not showing us the Monday. Oh, there's the Monday right there. No. That's 16th, 17th, and 18th. Today's the 18th. And so it's been telling us for the last 2 days there's going to be weakness, and there was, from there to there. And now it made a new low there, but by the end of the day it punched back up, and that's where we're at now. We're trying to climb into the buy today, and this is the weekly buy. So maybe they're going to be buying natural gas. You're going to see some strength in the natural gas now kicking out. So that's the daily and the weekly telling you the strength is coming into it. All right. And then last but not least, we go over to Spain. We're going to take a look at that ENG stock. It's an energy company down there that gives us a general idea of what's going on in Europe with the energy products. Right there. Give it a refresh. And you see the last couple days it's been trying to push up. You see all 3 days it's in a buy. But unfortunately you can't get long because we've been in a weekly sell going on a second week. So, when it went into the sell in here, it was okay. You could be shorted. And sure enough, it was all minus and so forth. But it's really trapped in that situation now where they still can't get it to go, which is a very good thing, we don't want to see Europeans freezing to death. We don't want to see anybody freezing to death. So that is the story there. All right, what else do we got going on here, traders? I want to take a look at, since copper was, let's get rid of that. Since copper was getting whacked, and there is that article right there, China's secretly buying up massive amounts of gold, 10 times more than the official reported by the PBOC. They claim that only 5 tons have been bought, but in October, China bought 55 tons through London. Now, let's take a look at, I want to see where Shanghai is. Let's see what the index is doing. We keep on waiting for the new sugar high, but it doesn't seem to be happening. You see a lot of selling here. It's been in a daily sell now for, what's that, 7 days. It's right there since the 9th. So it went into the sell there on the 10th and has been in the sell ever since. Unfortunately, traders, we're in a weekly buy for those 3 weeks since back in here. So you could ride the long, take the profit, and do nothing. It's in that neutral stance now. And that's the way it works usually with us guys and gals. It's, be long, be short, or be neutral. It's always that situation. Depending on, that's the raw delta as we call it. In other words, just being long or short. Then, if you're using option derivatives, it's a whole different game. You can build different positions and have less risk and make more money. And that's usually the way that works. Bull spreads, bear spreads, things like that. You have limited risk. Now let's take a look at Hong Kong. Let's see what Hong Kong is up to. The Hang Seng. Where are you, Hang Seng? There it is right there, the Hang Seng. The Hang Seng's doing the same thing from the 9th. And the same thing also on the weekly. Let's take a look at Taiwan. Let's see how it's looking. I know we've been watching chip manufacturing lose money lately, so I'd imagine the Taiwan indice should be in the minus. There it is right there. It looks kind of the same. It's been in the sell for, since the 5th. Yeah, it's a minus there. And it was in a sell back then, and then it climbed into a buy and then pushed it into a sell. You could take another short there that week. Right, you could be short for that week with no problem. And then now we're trying to climb into the buy. So, obviously with it in a minus, you can't be short anymore because, the weekly's firm. So what you do is you wait until it get a good, now it looks like it's trying to get into a buy. There's the 18th. Unfortunately, it hasn't lifted there yet. That's yesterday. We're waiting to see what this does since, it's kind of U.S. hours versus your Pacific hours, that type of thing. All right. I guess we have to get out of here. What else should we say? Title today? How about negative rates. Golden oldie. Oldie. Golden oldie. Negative. Let's see. Negative rates. There we go. That'll be the. That will be the title today. Why not? Negative rates. Golden oldie. Negative rates. What a classic that was. It's as somebody in the financial business for almost 50 years, trading markets, hedge funds, and the whole gig, floor trading. It is kind of cool that I actually lived to see that. Unfortunately, most people don't know it. Basically, there it is, oldie, like that. That's the way it should be, oldie. Golden oldie. That's what we're going to put up there. Copy. There we go. Paste. Oh no, oldie. Golden oldie. Let's just do the whole thing again. There it is. So anyway, traders, we're out of here. This is Doc. Catch you tomorrow, same time, same channel. So Happy trails to you until we meet again. Happy trails to you, to all our trading friends. Ta-ta for now.